Hey guys, Akil here. Welcome back to the Trading Coach Podcast, another video edition. So head over to Spotify or YouTube if you want to check out that version. Go Toffees! Tough match against Liverpool today, but I have confidence in our newfound form. Praise David Moyes. But in today's episode of the Trading Coach Podcast, I want to talk about the 10 most beautiful words in trading. Now, before we hop in, I want you to do a few things. One, rate and review the podcast. If you haven't done so already, it takes just a second to do. You can literally do so while you're listening or watching this episode. And two, make sure you share this on your socials and feel free to reach out while you're on social media to yours truly if you have any questions or comments or ideas for episodes. I love reading through them. I love talking trading in general, so don't be shy about reaching out. The inspiration for today's podcast actually came from a social media post. Now, I don't really dig into Twitter too much anymore, but whenever there's funky stuff happening in the market and I need a quick answer for why it's happening, Twitter is still one of the quickest sources that I have to find out what the heck is going on. And while I was perusing about some of the madness that's happening with all this tariff stuff in the background, I stumbled across a question from a trader that I respect, a good buddy of mine, Stephen Burns. By the way, if you haven't checked out Stephen Burns, he has a great site called newtraderu.com, I believe it is. He's also got some really good books. I think it's called, Rich Trader, something Trader. I have two of them. I'm going to butcher the name. Let me edit that out. New Trader, Rich Trader. It is a fantastic book. If I were ever to write a book, it's how I would want to write it, not in like boring technical jargon, but a book that is more like a story that delivers really, really good trading messages. It's really thin, really cheap, so check it out if you haven't done so already. Steven doesn't pay me to say this. I just truly respect him, and we have a mutual respect across this industry. But he put out a cool question on the Twitter or X the other day. X, right? I don't know why I did that, but I did it. It's over. Asking, what is the most beautiful word in trading? So what I decided to do after chiming in was go through all the responses and see what you guys commonly thought. And I put together a list of the most popular ones that were chosen. And then I added a few that I thought were very important myself. And what we're going to do today is go through them. So let's start off with number one. This was the most popular one. Profit. Who would have thought, right? Profit is the game. Now, this is a gift and a curse, right? Obviously, everyone's going to say profit is the most important thing. And yes, profits are important. Like, would you trade if you weren't making profits or didn't have the hope or dream of making profits? Probably not, right? You know, trading is fun. I love trading. I love technical analysis. I love marking up the charts, probably more than anyone out there. But if I weren't making money off of it, I wouldn't waste my time doing it, or at least waste or invest as much time as I am doing it. So yes, we have to make profit. At the end of the day, you want to run a business because it makes money. However, the flip side of that is you can't be consumed with profit. Instead of focusing on profit, you need to focus on what needs to be done in order to make profit. And that's why we say process over outcome. If you invest in the process, the outcome will be one that you desire. If you solely focus on profits, it's so easy to kind of get out of your routine, to break your rules and end up chasing profits. And typically when you end up doing that, you end up losing even more. So yes, we want to focus on profit, but it's important to focus on the things that will make you profit, right? The actions that will make you profit versus the profit itself. Number two, and I was very happy about this one, discipline and patience, right? I was surprised that the internet said this, right? Because most things on the internet are not about anything trading psychology, but I guess the people that I follow tend to have similar beliefs, because if we didn't, I wouldn't follow them. That's how the whole algorithm works, right? But discipline and patience is key. We just talked about following the process to make the profits, right? Well, how do you follow the process consistently? By having discipline and patience. Discipline to follow your trading routine. Discipline to follow your trading plan. Discipline to do only the things that you're supposed to do in the market. Discipline to avoid the things that you're not supposed to do in the market. Patience, I kind of lumped them together as well, because patience is a big part of that. We often hear that FOMO, fear of missing out, is one of the biggest mistakes, and that is something that causes traders to enter trades early or exit trades early, right? Patience is a big part of that. Understanding, what do I need the market to show me? When does the market show it to me? And me being able to stand still, keep my powder dry until the market gives me that thing that I need. So really, really good one right there. Next up is consistency, another one that I enjoy, and everything that I just mentioned, right? Profit, process, discipline, patience, all of that is irrelevant if you can't be consistent. Yes, you can be disciplined one day, but if you're undisciplined and impatient the next 5 days, what does it matter, right? Yes, you can take a great trade one day, but if you can't come back and do it the next week, the next month, what does it matter? So many traders get into trouble because they have these mini hot streaks and it causes them to break out of their routine, meaning they start trading and all of a sudden they have these good results and they're like, you know what? I'm the man. I'm feeling myself. I don't need no stinking rules, and they throw them. Sorry, Stephen. I didn't mean to throw the book. I didn't want to throw the Everton hat, but the book was the first. It was the book. It was the coffee. There was limited options, right? So I had to throw something. But they throw their rules away like that because they think they are now above their rule, right? And all that does is cause them to make mistakes. So they wonder why they start losing money because they've broken out of the consistency of the thing that they're supposed to do that's going to make them money, and now they're back in the same old spiral of like making mistakes, blowing money, doing the right thing, making money, feeling that they're above it, forgetting their rules, making mistakes, and blowing money again. So you have to be consistent. Whatever you do in life, I promise you, consistency is the key, especially in trading where it does take a while to get successful. I spoke to a trader who's going to be working with us in a little bit, and he asked, how long does it typically take for a trader to become successful? I said anywhere between 6 and 18 months. So a half a year to a year and a half is typically what we see. A half a year being on the kind of the low side if someone maybe is already prepared and just needs a few tweaks, needs to iron out a few things. A year and a half for someone that's brand new. And it doesn't mean a year and a half of learning, but learning takes up maybe 6 months of that. But then it's just allowing yourself time to become consistent because you're going to take 1 step forward, 2 steps back. 1 step forward, 2 steps back. You're going to have to work through that area until you can get to the point where you're consistent every single day. And once you achieve that point, that's where the money starts coming in. Number 4, stop loss. Another surprise for me because I've seen so many traders out there saying, Akil, I don't need a stop loss. Why put a stop loss in? It just means my broker knows where my stops are at and they're going to stop me out. And my response to that is always that your broker doesn't care about you. 1, 2, why would your broker want to stop you out? Your broker is not against you. Your broker wants you to survive so they can keep getting spreads and commissions from you. That's the whole name of the game. But stop loss is important because stop loss means that you have good risk management, which I believe is somewhere on this list. It may be next, maybe somewhere down the line, right? A stop loss means that you have a safety net. Like, yes, you are jumping out of this airplane, you have a parachute, but you have a secondary chute as well, just in case something goes wrong. And it's always good to be prepared for something to go wrong. Trading is all about having a chip in a chair, meaning that as long as you have money in the game, you can survive and make more money. But if you do something dumb and you blow everything on a single trade, perhaps because you don't have a stop loss in, then you're done. You can't play. And if you can't play, you can't dig yourself out of the hole. So I know some of you guys don't like them, but remember that a stop loss should be placed in a place where your prediction is wrong. And if your prediction is wrong, right, this isn't an ego thing. You don't need to stick in the trade to prove you're right. You need to get out, right? You need to prove that you're right in your analysis, saying that the price went to a point where I said I'm wrong. I'll forget about it. I'll review it. I'll move on to the next opportunity. Next up is freedom. I got a cool Trading Coach podcast episode coming out soon, perhaps talking about kind of what freedom means to me and my journey of where I decided, the moment I decided that I want to be free and no longer kind of a slave to the normal kind of 9-to-5 life and everyone telling me what to do. Well, hopefully I'll bring that out later. But freedom is key. It is the number one reason that I got involved in trading. And freedom means a lot of things to me. It started off by meaning financial freedom. I think that's something that we all want. We all want to have enough money that it allows us to do all the things that we want to do. If we want to go out and something small, you want to go out and buy a pizza for the kids. We don't have to check the credit card balance to be like, I don't know if we can do that, right? If we wanted to take a vacation, we can set up a vacation, right? It doesn't necessarily mean living like this lavish life. You don't have to be, driving around in a Ferrari with gold chains and pulled by tigers and stuff like that. It just means that you have the ability to be flexible. You have the ability to do some of the things that you want to do without necessarily sacrificing something bigger, right? So financial freedom is key. Freedom of time is even bigger, and that's something that I learned after achieving financial freedom. I think most people don't understand freedom of time until they've gotten financial freedom. In a sense, you kind of need one to have the other. I suppose I'll probably need to think about that a little bit deeper. I suppose you can have them you could have one without the other because, anyway, maybe we'll leave that for another discussion. But freedom of time was the most important thing for me, especially after having kids. Again, being someone that has worked my entire life and worked a lot. Like I put in hours and hours and hours. I am still to this day a workosaurus rex, right? Where I will work harder than everyone else out there. But it's because I choose to, it's not because I have to. And once I had kids and I saw all the events that they were doing, whether it's sporting events, whether it's school plays, whether it's recitals, whether it's field day, whether it's just like going to the park and spending quality time with my children, I value the ability to be able to do that. I value the ability to be like, hey, I'm going to go play with my kids and I don't have to ask permission. So I think freedom is big. And the cool thing about trading is that because it's so flexible, you can work trading around pretty much any type of lifestyle that you want. I was telling my traders earlier about my mentor who was, he calls himself a nomadic trader, where he moved from state to state to state, went overseas, and just like, as long as he has his laptop, he can extract money from the market and pay for his lifestyle. It's just cool that he has the ability to travel like that while keeping his job, which is pretty awesome. Next is liquidity. What is liquidity? Well, liquidity is needed for the markets to move. If there is no liquidity in the market, there is no movement. If there is no movement, there's no way to make profit. So yeah, liquidity is pretty important. Now there's different types of liquidity. It could be good, it could be bad. I think that has more to do if you're trading, and I don't want to say trading style, but you as a trader and how good or bad you are. But yeah, liquidity is important. Don't really have much else to say about that, but you need markets to move in order to make profit. So yeah, it's good. Next up, risk-free/risk management. Risk-free was actually the term that I put in for the most beautiful word in trading, because there is nothing better for me from a psychological and a financial perspective. I guess for a take profit would be better, but from a psychological perspective than moving stops to break even. I love profits getting hit, don't get me wrong, but I am risk averse, right? The number one rule that I was taught in trading is don't go broke. The number two rule that I was taught in trading was refer back to rule number one, which means don't go broke. Great traders are good risk managers. I have that flipped around. Good traders are great risk managers. So my first goal is always not to lose. You can call that a conservative approach if you want. It's just my personal style. So whenever I'm in a trade and I can actively manage a trade and I can put myself in a position where a target one is hit, or even if a target one isn't hit, or a position where I can move my stop loss to break even and I can remove all risk on the trade, that is beautiful. One, it means that the trade is working in my favor if I get to that point. But two, the psychological burden is off my shoulder. The fact that, oh my gosh, I could lose money. Oh my gosh, I could lose money. Oh my gosh, I could lose money. That is no longer there. I know there are only two options in this trade. I can make money, or make money, baby, right? There we go. Or I can get out for break even. And either way, that is a win. I told you guys this story many times before, but there was a trader, I didn't know him, but I read this story about a trader who would set a target, his first target, like just a few pips above where he entered. And people were asking him, like, why would you do that? Your second target is really, really far away. That first target is really, really close. And he said, well, because just the fact of me knowing that I didn't lose my maximum risk, right? Even if it was 1%, that I made something off the trade and didn't lose my maximum risk, took the burden off his shoulder, was a weight off his shoulder. Psychologically, it allowed him to stay in the trade. And I see that with a lot of traders as well, where once you get the break even and the risk is gone, it allows you to actually let the trade play out the way that you predicted. And one of the biggest flaws that many traders have is taking targets early because of that fear of loss. So risk management, risk-free, great stuff. I did that twice in a row. I'm going to do something else next time. Maybe a thumbs down for something. Next up, sleep/personal health, right? This is big, right? You are the trader, right? Even if you're running a mechanical system, you have to check on it and make sure it's doing the things that it needs to do. You are the trader. You need to take care of yourself. If you do not take care of yourself, your trading will suffer. I was up really, really early this morning. We had a snowstorm, so I'm up shoveling because I had meetings right after the live room. And I told the members this morning, hey, I'm not feeling like myself today. Like, I apologize in advance, but I don't feel like I'm really up to trading today. We have another podcast coming out too about a way to quantify your trading state, where you can kind of make it binary. Yes, I am in position to trade. No, I should not trade. So that's very important. But you got to take care of yourself, right? The more sleep you get, the more healthy you are, the sharper you are in the markets. And if you're new to trading, I tell you what, it's not as simple as going onto a chart and looking at candlesticks dance all day. Like, you have to be sharp. The clues and the edges in trading are very, 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 very small. Most of what you see on the chart is completely random. It's a whole bunch of randomness, and then every once in a while there's a small clue that presents you with an opportunity and presents you with an edge. As a trader, you have to be able to dissect all that randomness and find that clue. It's like, what was that show, Severance, on Apple TV? I don't know if you guys have watched it all, where I don't know what they're doing. I didn't watch season 2 yet, don't spoil it, but they're on the computer and there's all the stuff and they have to wait, and like pick the thing out, right? That is pretty much trading, which, could this be Severance as well? Okay, another thought for another day. Confirmation was the next one. I like confirmation because for me, confirmation stands for conservativeness, right? And I don't mean conservativeness in a negative way like you're scared, but rather you're not rushing into opportunities, right? I always say that we want to be predictive in our analysis, reactive in our execution, meaning that when we look at a price chart, we want to predict if this, then that, if this, then that. I'm looking at that chart saying, hey, if price breaks and closes above that level, then I expect price to go up. And every time I say that, right, I'll get messages from traders, hey, Akil, did you get long, price broken, close below, did you get broad, blah, blah, blah. And I'm like, no, right? We need to wait for confirmation. Yes, the first part of the job is done. Price broke and closed below, but now I need a reason for entry. I need the market to give me every clue, and clues can be you can have aggressive clues, you can have conservative clues, meaning that you can have one little clue that causes you to enter, you can look for 50 million clues that causes you to enter. That's gonna be up to you and your trading style. But we don't want to hop into trades just because we make a prediction. We want to be predictive in our analysis, but when it comes to executing the order, we want to be reactive, meaning that we want to wait for the market to tell us that our prediction is more likely to be right than wrong. Last but not least, this is one of my favorite ones, compounding. And this is the real secret to trading success, right? Trading is a journey. Trading is not a get-rich-quick scheme. It takes a very long time to be successful in trading. And to be honest with you, many traders quit before they have the chance to gain success. Not even just success is going from losing trader to break-even trader, but even after you become a profitable trader, consistently profitable trader, many traders quit because they don't make the amount of money that they think they deserve. And you have to realize that the trading journey as far as your equity looks like this. It's going to start off very, very slow for about 5 years, and then boom, it's gonna jump up exponentially, and it's the power of compounding. If you don't believe me, I have a previous Trading Coach podcast covering this topic, or take out an Excel spreadsheet, give yourself, 5 years, put in your average return, and just look at what happens as you stay consistent with your average blank percent return year after year after year after year. The first couple years, you're not too impressed, but all of a sudden, once your account starts to compound and that 40% return is a lot more, you're gonna be amazed, but you have to make it to that level. And again, those that have the mindset of get rich quick, unfortunately, they bail out and move to the next thing before getting to that point in time. So I hope you enjoyed the episode. Let me know what is the most beautiful word in trading for you. You can type it below in the comment section of this video. And also, I got a cool gift for you. In the description box below, I'm gonna share with you a link to a computer buyer's guide. I just got a new system built myself, and I'm getting all these questions. Akil, how did you build your trading computer? And I'm like, I didn't. I had someone else do it for me. I don't really know anything about the tech stuff. So if you're interested in that stuff, check out the buyer's guide. It breaks down everything you need to know with different types of setups for trading specific computers. All right, until next time, plan your trade, trade your plan. Adios.